What's going on, guys? It's me, Tim. You're here at Stock Picks by Tim, and today we're dealing with an awful red day. And I'm going to go into kind of what's going on and what I think the market needs to see to, continue this bullish action. Despite the red day today, the majority of January, beginning of February, we have seen a general uptrend. And I wanted to show you a few things. First off, I want to show you a date that you need to be aware of and watch out for. Also, we're going to just quickly kind of go over the Fed conference, what happened, the couple main points. And we're also going to look at the SPY and a break that it finally had out of a long, just a descending pattern that we've been seeing. So if you guys like these videos, consider hitting the like, subscribe, ring the notification bell. Helps me out a lot. And let's get into this. So first off, those of you that don't know, we did see a 0.25 rate hike or 25 basis point hike, and it was pretty much what was expected. Now we did have this recent conference, and there were some more words shed here. And two things, in my opinion. One thing that's a positive, but one thing that's a negative that kind of is, in my opinion, shaking the market. Now, the first thing is that, Jerome Powell said at this meeting that disinflation has begun, but is going to take time. Now, the key word here is disinflation, not deflation. We're seeing a disinflation. The rate of inflation is decreasing. We are still seeing inflation. However, the amount of inflation has been going down. Now, I think the market saw this and, kind of views it as, hey, the Fed's making progress here. We're almost at the end of this. It's time to rally. Now, the negative, in my opinion, that's kind of slowing down the market here today and putting a little bit of fear in the market is maybe Wall Street and everyone is digesting this meeting and kind of realizing that, as we see a strong labor market, the Fed can potentially be more aggressive. And I think something's key here that Fed Powell said. If we continue to get, for example, strong labor market reports, and this is important, or higher inflation reports, so we don't need both. We can see one or the other, and the Fed can potentially be more hawkish and raise rates to more of an extent than we expected. And he says it may well be the case that we have to do more and raise rates more than is priced in. Now, I'll leave this article below for you guys to go over to, but I just wanted to bring you those kind of two main points here. It's kind of a tug of war with the market. We want to see a strong economy, but we really don't want to see a strong economy right now as the Fed is raising rates because they can potentially be a little more aggressive with their rate hikes. Now, in my eyes, the market is going to kind of stay in suspense here until we see our next CPI, and this is coming out on Valentine's Day on the 14th. So don't forget your flowers and heart chocolates, all that good stuff. Don't get in trouble. And one thing to think about is, our next CPI is coming out, but we do have another one coming out in March before the next Fed meeting. So we do have kind of two chances here to see something good come out of inflation, come out of our CPI numbers. And, if we do see a bad CPI here for February representing January, all hope is not lost because we do have a redemption. We do have, of course, March, one more CPI coming out before the Fed meeting. And I would personally prefer, if one had to be bad, I'd prefer this one coming up to be bad and the next one to be good, just so we kind of have some fresh data before the Fed meeting. But who knows, maybe they'll both come in surprisingly good. Maybe they'll both come in surprisingly bad. Only time will tell. But I do really think that, everything kind of right now depends on CPI. And of course, seeing the labor market actually cool off. We saw some very hot numbers that came in. Last time we were expecting like 190,000 or something, and we saw like 500,000, almost a threefold increase. And that's definitely not reassuring when you're worried about rate hikes. Because the Fed will raise rates more in a strong economy, whereas when things get a little worse, when the economy seems very weak, the Fed has to be very cautious in these rate hikes. But I personally believe that, let's get this damn inflation under control and get this behind us. Now, one thing you have to think about is, according to this, it says the current target rate, the Fed fund rate, is supposed to be 4.5 to 4.75. I could have swore it was 5% was their target. I could be wrong, but you'll see that we are right about to their target. They might actually raise their target. I don't think we have news of that yet. But, that's one thing that will, of course, scare the market if they say, our new federal fund target is going to be 6%, meaning they're going to have to do definitely a couple more 0.25 hikes. But, as we stand right now, we could be just looking at potentially one more 0.25% increase. It all, like I said, rests on CPI. But in my eyes, it's just insane. When you look at the year ago numbers, they were at a 25 basis point federal fund rate. Now, one thing that I did want to show you guys on the SPY that's definitely encouraging is that we did break out of this long, just descending resistance here, or descending channel, you could call it. It's kind of a broadening pattern, to be honest, but either way, we broke out of this downtrend finally. It was established in January of 2022, so we're talking about literally about a year, and we finally broke out of it. Now, one way that I would potentially trade this is I would set a stop loss right around $400. Let this momentum ride. We did see a breakout of this. This is very bullish in my eyes. We're seeing a lot of green, a lot of buying, despite a little negative pullback day. I do think this can definitely continue into the CPI numbers, and then that's when, things can definitely dump. But we'll see where things go, and just to be safe, that's why I said, you set a stop loss right around 400. If we do come down, retest this, and we don't actually bounce and we break under it, well, if you set a stop loss somewhere around 400, you definitely want to tweak that, maybe go with 398, something like that. But you set a stop loss right around there, and if we do break back into this pattern, that could likely cause a lot of fear and a dump back down. But seeing this breakout is reassuring. We might likely retest it before another bounce or a drop back in. So I do think a $400 stop loss would be a great way to trade the SPY right now. And if you're bullish on the momentum that the SPY is seeing, that's definitely one way to play it. And kind of de-risk yourself if things go the other way. But how are you guys feeling about the market lately? What's your strategy on the SPY? Are you just a buy and hold type of person? Or do you like to play certain levels? Now, it's definitely going to be an interesting couple of weeks. We're approaching CPI, and it's going to be very important to watch it. And of course, the Fed will be closely watching CPI numbers to show that we're seeing a decline in inflation and getting closer and closer to their 2% target. We are still quite a ways off, and it wouldn't really surprise me to see a couple more rate hikes. But one thing to think about, as always, is the market's forward looking, and while any expected rate hikes are priced in, anything that comes out unexpected, of course, will shock the market. But I do believe the market is already expecting at least one more rate hike, maybe even 25 basis point rate hikes. But thanks as always for watching, guys. Let me know how you're feeling about the market lately. Hope you have a good rest of your day and take it easy.